The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody. Ladies and gentlemen, hello and welcome to Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today it's the market movers of 10th of April 2018. Just as always, I would appreciate a very short yes or why in that small questions box, just to let me know that both the audio and the screencast are working properly. And let me change those slides here so that you actually see that things are happening on the screen. Thank you very much, everybody. Really appreciate the feedback. Yeah, and guys, please, if there are any questions during the course of this webinar, which is scheduled to run for around about half an hour, please let me know. I want to answer your questions. I want to help you to become the best trader that you can become. And please ask questions. I think that's really the shortcut to learn as much as possible. If something is not clear, if you would like me to elaborate on some concepts, I'm more than happy to help you there. So before we get started, you can already see our usual risk disclaimers. Please take a moment of your time to read through them. Make sure that you're okay with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the instruments that you're using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the core part of today's webinar, the live market analysis. Even if I place a trade on the Nadex platform here, it's just my opinion. It's just my analysis. I can be completely wrong. Trading is about probabilities. Trading is about hopefully having more potentially profitable trades on your hands than losing trades, but you will never be able to tell in advance if that next trade will potentially yield a profit or will be a loser. That's just the nature of the game. With the strategy, you can stack those probabilities in your favor, and in the end, once you master those strategies, trading can become a very profitable profession. But it's always about probabilities. So my analysis is just that, my analysis. I want to show you guys an opportunity to look inside my head, what I'm seeing on those charts. Maybe there's something useful there for you as well. I hope that that's the case. But yeah, no guarantees whatsoever, especially not when it comes to trading. So please make sure you understand this is all for educational purpose. And before we get started, we have here also the risk warning from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes including Forex, stock index futures, commodity futures, cryptocurrencies, and economic events. Trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. And that being said, let's just have a look at our agenda today and let's get started. I told you guys that we will never know if that next trade is going to work out or not. And for that reason, we must make our trades comparable. We must want to have an edge when it comes to trading. And our edge is our trading strategy. And we are building our trading strategy based on technical analysis. You could also be using fundamental analysis, which might be maybe more suitable for longer term investments. If you're going down to trade 5-minute charts and very short time frames, then probably technical analysis might be more beneficial than approaching this with some kind of macroeconomic analysis. So that's our style of trading. But once again, you trade the way that you would like to trade. There are many roads that lead to Rome, and same thing is true for trading. You just make trading work the way you want it to work. So let's have a look at what the markets are giving us today. Just a second while I move that screen in here. Now, what can I see here on my chart? The first market that we're looking at is US dollar versus the Canadian dollar, the so-called loonie. And yeah, what can I see here on this chart? We're looking here at a daily chart. I always like to start my analysis looking at a daily chart because I feel this is what the market is currently doing. That is the big picture. I can see that the market had been in a nice uptrend here just a few days, few weeks ago. It was higher highs and higher lows, and price always pulled back towards those price equilibrium levels. Let's make this a little bit larger here so that you guys can see it well. And the basic idea here is always price is moving higher, pulling back. Where is it pulling back to? It's pulling back. Price is mean reverting, which means it's pulling back towards its moving averages. And we're using here a 10 and 20 period moving average to help us identify those potential pullback areas. And this here pretty much was the sweet spot. This was the perfect trade setup. If I had seen that trade setup at that point in time, I would definitely have raised the order. I've gotten a pullback here in an established uptrend. I get a small bullish candle, and now market is poised to run higher once again. Now, what happened next? Price pulled back rather deeply. You can see the way, well, let's not just talk about you can see, but rather show you. I'm looking here at my Fib retracements, and just from the recent run higher, let's pick this swing point low and go to this swing point high here. You can see that the market has corrected here around about 50%, which happens to be also some kind of sweet spot. If you apply those Fib retracements, every time you get a pullback from 50 to 61.8% in that range, that's also a kind of sweet spot. So if that kind of sweet spot correlates, happens to be at the same point in time and place where a pullback if those moving averages occur, once again, we've stacked the probabilities a little bit more in our favor. All those things coming together. So that here would have been my perfect storm, and that's what I would have been looking for. Now, we got the next pullback here, but something was not just the same. So let's compare this pullback with the one that we just saw. And you can see that this pullback here at that point in time not only had taken us to the 61.8% retracement, but way deeper. Not only 78.6, so also even further down here, almost a 100% retracement. That's a huge sign here that something is not quite right. That pullback was too deep. It just doesn't look harmonic. It doesn't feel harmonic. It's too deep. It's not this healthy. Higher, a little bit of pullback. Higher, a little bit of pullback. Higher, a lot of pullback. A lot of pullback is not good. This lot of pullback suggests that this move might be over. And sure enough, our indicators here, MACD and RSI, are already showing that we're losing momentum at that stage. Now, Jason is asking, and thank you very much for that question, Jason. How do you figure out price equilibrium? Is it the same as ATR? No, ATR is a measure of volatility. In order to understand how fast does the market actually move, you could either look at standard deviations or at ATR, average true range. And you can see that if candles are rather small, ATR is getting smaller, and the standard deviations for historical volatility are also getting lower. If price is moving fast, if those candles are getting larger, then volatility obviously is increasing, and we also see that the ATR and the standard deviations are getting larger. The idea with those price equilibrium points is that price is mean reverting, which means price never moves in a straight line from A to B. It's always that pattern that we see here. Price is pushing higher, it's pulling back. It's moving again, it's pulling back. You can think of those price equilibrium levels also like an elastic band, a rubber band from office supplies, for example. You just take that elastic band, that rubber band in your fingers, and you don't pull it. If it's resting, it's at its equilibrium position. It's at its resting position. Now, if you pull at that rubber band, you feel pressure, you feel tension. And once you let it go, it tends to snap back. And we feel that price is doing just the same thing. If price is here in the area of our 10 and 20 period moving average, that's when this elastic band is resting. And if price moves away, there's tension. It tends to snap back. Same thing here. Price has moved away by quite a bit, and now it's snapping back. Where is it snapping back to? towards its equilibrium position, towards its resting position. So this is what we primarily use the 10 and 20 period moving average for. Same thing here, price pushed higher, price is pulling back once again. Where is it pulling back to? First, price equilibrium levels, moving average buy zone, but as I've told, that pullback here is a little bit deeper. Jason, thank you very much for that question. Kirby is asking another good question. Any reason you didn't use a FIB retracement starting at the early February level? Now let's do this FIB retracement again. I always apply my FIB retracements. First thing, I must have a trending environment. If the market is just going sideways, it doesn't mean a thing to me. This is just not the proper tool then to use to analyze those markets. I always must have a trend. Now, let's just assume I've gotten here to this pullback and price is pushing higher to this level. And I'm always drawing my FIB retracements from the most recent swing point low to the most recent swing point high. Let's make it like that. So that would be my primary FIB retracement that I'm analyzing here. But you're absolutely right, Kirby. We can apply more FIB retracements here. I can go for another one and say I can start with the previous one and also draw that one in. And the idea here is now, if I find an area where the pullback from this previous move, which could also be thought of that move of the next higher time frame, if that happens to cluster here somewhere, it's not the case here, but for example, if that 38.2 was just sitting perfectly on top of the 50, I now have multiple reasons why I think that this price level here might just have gotten a little bit more interesting. And I could even go for the next one here and do the same thing. Let's be sure here, this is currently the actual swing point high. I haven't seen this one here yet. So once again, is there any cluster? Is there anything where those things start to stack? No, I don't see anything here setting up at that point in time. However, if I had gotten a cluster, maybe then also on top of some kind of pivot point or other indicators like that, then those price levels where those clusters occur become more significant. A way you could think about this starting that swing point here to there would also be that you say, okay, I'm trying to draw this in on a monthly chart, and probably this would be a monthly low and this would be the most recent one. So, but on the chart that I intend to trade, it's always the most recent swing point low, which would be that one, and the most recent swing point high. All this here hasn't happened yet at that point in time. So thanks for those questions. Really good questions, because people usually just start to put on those FIB retracements at any point in time, and then they wonder why there is no significance to them, why they are not really working. You have to apply them properly. So how can we apply them here in this current move? What can we see now? The market, obviously, first we got this deep pullback. We made a small retracement once again, and then we started to make new lower lows. This low here clearly is a lower low than here. And if I think that this was a low and we made a pullback, then this was already a lower high compared to there. We can see that the 10 period moving average has now crossed below the 20. And we can also see that the 50 slowly starts to fall into place. And all this is now suggesting that this market really is going down. All right, so price is pushing lower. Price has pushed through this horizontal level of support resistance. Here it should have acted as support. And if we drop to those lower time frames, we will be able to see that for a brief period of time it acted as support, but now it's gone through. Let's apply FIB retracements once again. If I think that this is my most recent swing point high, then that would be the correct way to draw them. Because swing point high to swing point low, that's the current level. Now, I can also, of course, do it from the previous one to the same. And now I start to see that the 38.2% retracement is sitting rather close here to the 61.8, which would give that level here some more significance. That's the daily chart. But guys, honestly, the thing that interests me most about this move here to lower prices is it seems that we have cleared this level and we could see a potential move here to the next significant level of support and that would be this other area here indicated by the blue and orange lines. Now let's start to drop down with our time frames here. Let's have a look at an hourly chart, for example. And you can see, yes, sure enough, this level has started or has been acting as support level. Finally we broke below this level and price is pushing lower. We start to see that this move to the downside here, what are we with regard to our price equilibrium levels? Where are we with regard to our moving average sell zone? We are overextended. Price has moved quite a bit, quite a distance in a short period of time. So what could be happening next? I don't know. Nobody knows. I ask what could be happening. And I think a scenario which is not that unlikely, in the end it's all about stacking probabilities, might be that price is now starting and trying to pull back to fix this potential overextension, to catch its breath. So why am I getting that idea? Well, first we have this overextension. Next thing is that we think and also can see, while this red candle here was really obviously some kind of bearish candle, please note that we do have this long lower shadow. And this long lower shadow clearly suggests that sellers have not been able to sustain their momentum, to really keep that pressure up to sell that market. Essentially within that candle, buyers were able to drive prices back again, at least more than halfway back up again. The next candle is an inside bar. It's completely within the range of the previous one. And even the candle which is printing right now, and guys, it just has started printing, that candle will still be good for another 45 minutes until we can finally decide what the structure of this candle is. But still, it's within the range of that pretty bullish candle thanks to this long lower shadow. And all this currently suggests to me some kind of positive momentum, at least on a very short-term basis, short-term note. We could also be looking here, of course, to a 15-minute chart and see that, yes, we are seeing that this momentum is slowing down. Price has started to move sideways a little bit. If we drop even lower with our time frames, you can start to see some divergence setting up here. So while price is making new lower low, another indication that there might be some kind of pullback just about to happen. Now let's go back here to an hourly chart. What could be a sensible area for a pullback? Well, obviously I think that this level might be really interesting and attractive. Why not use our flip tools once again? And you see I've drawn the limit from that what I consider to be a swing point high to a swing point low. And guess what? The 5061.8 will just put us back here into our moving average sell zone once again. Let's try with another pullback and see on other fib level. Once again, the 6150 seems to be rather interesting. And finally, let's pick this one here and put it there. Yeah, pull back way beyond this level. That one is not really that interesting to me. Though the idea is here, I might think that maybe, it's always about maybe, we might get a pullback here towards this 126.50 level. Now, we're talking about the Loonie, and let's just have a look here at the platform and see how this could be potentially tradable. And guys, once again, just an educational finger exercise. It's not that I placed that trade in my own account. It's a demo account. It's just in order to show you guys how this could be approachable. So we're looking at the US dollar against the Canadian dollar, and I think we might be seeing some kind of pullback. So when can this pullback occur? With this contract here, we're looking at 2 hours and 41 minutes left. Do I think that we will get a pullback within those 3 hours remaining? Might be pushing it a little bit. Remember, with options, you not only have to be right on the direction, but the timing is also rather crucial and critical. So let's have a look here at the 7 p.m. contract. And sure enough, with 6 hours, 40 minutes, there's more time left for those trades to actually work out. And so let's have a look and see where price might be going to. We could be buying, for example, and once again, it's just any other If you arrive at a different conclusion, that's perfectly fine. If you want to pick a different time frame, that's perfectly fine. This is just one example of what could be. Now, what is my trade idea, my potential trade idea here? If price is pulling back towards this 126.40 level, round about here, within the next 6 hours and 40 minutes, the contract that I could be buying now for $17 per contract should be worth something round about $50. How do I know that? Because if price is retracing here towards this 126.40 level, this contract will be trading at the money. And if it's trading at the money, those binaries here should be worth something round about $50. That's just the price of those binaries behaves like delta of conventional options. And if an option is trading at the money, that contract should have a delta of around about 50. Same logic applies here. So I have $24,400 in my demo account. Proper position sizing and risk management. I want to risk 1% of my account potentially on that trade. So how many contracts can I trade here? Well, I could start to just dial up those numbers, and this is one of the most powerful features here, personally for me, which I see with the with trading here at Nadex and becoming a member of the exchange. You just see immediately what your maximum loss is. I can easily trade 14 contracts and still have only a risk of 1% of my account. My maximum profit, however, way larger. I have a huge reward to risk ratio. Why? Because we're trading here very far away from where that contract is. That contract currently is deeply out of the money. However, the main idea here is, and let's just adapt those numbers. If I place that trade now, and again, it's just for demonstrational purposes, once that position is live, which it is already right now, I can now start to already enter in order to close that position. I could be looking here into selling this contract again, and I don't want to sell, for example, all 15. I could start to scale out. I could look into scaling out when price hits a potential level of, I just paid around about $16 for that contract. So if price is at 32, I already made pretty much what I've been risking. So closing out that trade at that stage is just taking risk off the table and trying to apply proper trade management here. So I can easily put that order in now. And you see that's a limit order. It's just sitting here. And if price happens to pull back, I don't know if it will, but if it happens to pull back and hits 32, those 8 contracts will be closed out. Next thing is I could also then say, okay, the remaining 7 contracts, I want to sell those once price hits, for example, 50. The one big takeaway for me here is, for you guys here, for me, the message that I want to send is, you don't have to wait for those contracts to expire. It's not a, I must make sure that I have guessed correctly where price will be at expiry. No, you can manage that position upfront. You can easily add to your position. You can scale out of your position. It's a normal position. It's not fire and forget. You can actively manage your position. And this is so powerful, especially once you've understood that if the underlying market is trading at the strike price of an option, then the price of that option should be around about 50. Those two things coming together, I feel that this is really a powerful thing to keep in mind. But again, it's just an idea here. It's not that I recommend that trade. It's just something here where those concepts and principles could be analyzed and could be applied. Unfortunately, I don't have that crystal ball, and yeah, nobody does. So it's about, you want to be right more often than not at that stage, and the winners should be larger. And those things coming together is how you make money. Kirby, thank you very much. Kirby just said selling half your position to cover the cost of the trade sounds like a smart move. Actually, it is, because people always think it's about making money. Truth to be told is, it's about not losing money. you should always focus on risk management first, and closing half of your position when you have made pretty much what you can lose with the remaining part of your position. You have turned that trade at that point in time usually into a risk-free trade. The great thing about Nadex is you know your risk up front, so at that point you have definitely eliminated your risk totally. You know your downside here at Nadex. That's absolutely awesome. With futures, with CFDs, with stocks, I don't care what the underlying market is. You don't have that guarantee of the capped downside. And so just taking half position off once you've hit your one-to-one profit target, you're moving a lot of potentially losing trades to break-even trades. So you have avoided losing money, and the remaining trades that eventually might work out, those take care of the rest. That's the way to say it. Randall, thank you very much. Guys, I have to speed it up, just 5 more minutes left, and I also wanted to talk about the British pound against the Japanese yen here today. What we're seeing here is that the daily chart has now started to push higher. We can see that price has started to make higher highs and higher lows. Overall, I think this chart structure is still a fair bit clumsy and not really that beautiful. And the next thing to notice, we are now trading right into this level here at around about 152.30, something like that. Now, the basic idea is, where is price right now with regard to a moving average buy zone? It's again a wee bit overextended. We might be getting this pullback once again. And once we start to have a look here at those lower time frames, the structure of this 4-hour candle is currently turning into a somewhat bearish candle. Why is it bearish? Philip, that candle is green. It can't be bearish. Have a look at this long upper shadow here. You can see that the market is currently rejecting those higher prices, and it appears that the market might be pulling back at least a wee bit. Sure enough, that structure became much more clear and apparent here on the hourly chart. This shooting star candle here is a sure sign that a pullback might be occurring, that a pullback is rather likely. It's never a sure thing, but this candle suggests, yeah, maybe time for a pullback. And this pullback could take us here at least to that moving average buy zone of 151,700, something like that. Pretty much that same battle plan that we just saw might be applicable here. You have to perform your own analysis. You have to understand what you're seeing there. And if you think that this counter trend trade actually is worth it, usually understanding what the trend is and going with the direction of the trend is the smart thing to do. Because if something is in motion, it tends to stay in motion unless an opposing force is applied. This is what Newton's physics have taught us, or what we have been taught in school. And I think it's the same thing here with trading. If people are buying, and it takes a lot of selling to stop people buying. So moving with the trend, going with the trend, waiting for a trend continuation setup here might be the safer bet. There's never a sure bet, but it might be the safer bet. If you think that counter trend trade might be interesting and worth it, you might think, all right, maybe I should scale down with my risk exposure. Maybe I shouldn't risk 1% of my account. Maybe I should just risk 0.5%, something like that. Think about those ideas and concepts and analyze for yourself if they make sense for you, and if all this comes together. And in the end, you must have your own trading strategy. What we're giving you here is a good starting point, good start solution. But in the end, you must own your trading. You must perfectly understand why you like that chart, why you like that setup, and why you want to trade that market. All right, the final market is the S&P 500 for today. Where is it? Let's have a look here at the futures. That's the big daddy of the stock indices, and it's always beneficial, I think, to see and understand where this market is right now. And sure enough, it's again clumsy. It's moving lower. I can easily see that just looking here at my 3 moving averages, 10 below the 20, below the 50. There's definitely downward pressure. This level here of around about 2,615 seems to be a little bit strong, a little bit supportive here. Next thing to note, yesterday's candle, as it was a green candle, and by the way, this is not the official session. Those charts here include also the non-regular trading hours. So that's pretty much the price action of the complete day. So pretty bearish candle structure here. Why? Because all this push to higher prices has been rejected. And we're getting once again here this rejection today, not as pronounced as from the previous day. We're sitting just on top of this level. I still see the downward momentum. I don't really feel that the market is strong or picking up. And with trading, it always pays off to be patient and to wait for the perfect setup. I don't see a perfect setup here. I might become interested once price starts to break below this level and then maybe starts a pullback and getting a small bearish candle setting up just below this level. That might help me to stack my odds in my favor. So actually there might be something tradable here on that market. Overall, quick assessment here. I see more weakness than strength. And yeah, we will just have to wait and see. Guys, if you don't see something tradable on a chart, move on to the next market. Pick a different time frame. It doesn't make sense to trade any market just because you want to trade. There must be a setup. You must have an edge. Otherwise, it's just gambling. We don't want to be gambling. We want to be the house. We want to make money. And the strategy and following that strategy is what gives us that edge and which allows us in the end to become the house. All right, guys, that's it pretty much for today. Thank you very much for tuning in. You've seen me using the demo account today. Please, if you don't have a demo account yet, sign up. It's easy, it's straightforward. Those demo accounts are now also unlimited, so not just 14 days, but rather really practice and exercise as long as you want to. There's nothing wrong with practicing. And should there be any more questions, please by all means, here are multiple ways to reach out to Nadex and be in touch with them. And all your questions are definitely answered there fast and very professionally. Guys, thank you very much for the feedback. Really appreciate it. Let me just scroll. Yeah, thank you very much, everybody. And yeah, looking forward to catching you again next time. Happy trading. And yeah, take care, guys. Thank you very much and bye-bye.